very popular topic. This is a very popular topic that comes up, and I'm thrilled that the Vermont Law School is so generous to provide us with their time and expertise to talk to us about this today. I just want to go through a few quick slides before I turn things over to Jeannie Ikes, the presenter today. We have some housekeeping things and to cover. So as well as some information about our program and our sponsors, the folks that we're collaborating with to offer these classes and future classes. So my screen will advance. There we go. So just some general housekeeping. So this workshop will be recorded. So we do ask that you mute yourself when you're not speaking. And please make sure that your name shows in the Zoom window so we can identify you if need be. And please enter questions into chat. And so, after this workshop, you're going to receive an email from Sophia that's going to have the information that we're presenting today. It'll include our contact information for our services, the links to resources, and a copy of the presentation. So be on the lookout for that. And as other information gets identified, that also gets included into the email as well. So just a very quick introduction to our program. So the CVOEO Micro Business Development Program well, I should say the Micro Business Development Program is a statewide program that works with low to moderate income Vermonters to help them start or expand a business. There's no cost for our services, but folks do need to meet our income eligibility requirements. There are a total of 5 micro businesses around the state. My office, which covers Chittenden, Franklin, Grand Isle, and Addison counties, falls under CVOEO. And you can see our 3 business counselors below there, myself, Simeon Geigel, and John Gergley and Pacific Sangayuva. If you are interested in learning if you qualify and taking advantage of our business counseling services, please don't hesitate to reach out to us. And again, this information will be included in the follow-up information to this class to make it easier for you to connect with us. Also want to give a shout out to our partners. We have the People's Trust up in St. Albans, and they offer a variety of commercial and business banking products and services, as well as consulting services to help the folks that they work with succeed. Like Jay Cummings is the contact person there, a great guy and a great contact as well. Finally, our additional partners, part of the economic development corporations that cover our state. These 4 specifically cover the same region that CVOEO does. So these are the folks that cover Franklin County, Addison County, the Lake Champlain Islands, as well as the Greater Burlington Industrial Corporation. So excellent business resources, and I highly encourage you to connect with them if you would like to benefit from their services. And we'll be able to provide you with their contact information as well in the follow-up materials. Lastly, I would just like to give you an understanding about the other contacts for our micro business development program services. I mentioned there are 5 micro businesses around the state of Vermont. There's the Bennington-Rutland office there, Community Action, which covers Washington, Lamoille, East and West Orange counties. So you can think of that as the Montpelier region. Our program at CVOEO, NECA up in the Northeast Kingdom, as well as SEVCA, which covers the lower part of the state. That contact person needs to be updated at this point, but we will make sure that gets done. And if you need the contact person for SEVCA, please, you can put that in the message to me directly, and I'm happy to provide that to you, of course. Finally, here's our general statewide website, mbdp.org, if you would like to identify specifically the counselors that cover your regions, and as well as additional information about our program. Lastly, I always like to provide some information about other business development services. These some of these are statewide, other these are more specific to the Burlington region, which we cover. But nonetheless, I encourage everybody that I work with to tap into the strengths of all the business development resources that are out there. So in the Burlington area, there's the Burlington's Business and Workforce Development Program, Center for Women in Enterprise, Mercy Connections Women's Small Business Program, the Vermont Small Business Development Center, the Small Business Administration, that's more of a federal one, and finally Champlain Valley SCORE. So without further ado, I would like to turn it over to Jeannie Ikes. And Jeannie, thank you so much for taking the time to talk to us today about this topic. And I always learn something, even if I've seen this before, I had conversations on this topic. I know this is going to be really useful and helpful to folks. So thank you so much.
Well, thank you for having me. It's always a pleasure to present to this group. All right, so today we're going to talk about legal entities with a little discussion of tax. And what are legal entities? They're organizations for doing business. I'm going to try not to overwhelm you with legal terms. If I do and you don't know what one of them means, or I use something that seems Greek to you, drop it into chat. I'm happy to clarify. I spend my life talking to law students and other legal professionals, so sometimes I forget and use words that are lawyer term of art, and I'll try hard not to do that. All right, our agenda for today, we're going to talk about options for Vermont business entities. That's just how you organize your business so the law and the government understand and know who you are, what you're doing. It also creates some opportunities for protection for you. And then we're going to talk about what business entities can meet your goals. So every business has goals, things they want to accomplish when they're doing their business other than just make money sometimes, and how they want to do that business. And we're going to talk about which entities match your goals. How to do this process? Is it DIY? Is it something you can just do yourself? Do you need a lawyer to do it? When does a lawyer add value to choosing an entity and how you think about what your business will become for the long term? All right. So I'm going to kick this off by saying, what do business entity issues look like? So we talk about business entities, and business entities are no more than the legal wrapper for what your business is. And it helps you as a person oftentimes separate yourself from your business. Some of you may be thinking, I am my business. Why would I want to do that? Well, you might want to do that because you might not want to incur personal liability for something that your business does. And we'll talk about that more as we move forward. So what do business entity issues look like? What are some of those things you need to be thinking about? Well, you have a business idea and you're starting it up and you say, okay, so now what? Well, the business entity is your first now what? It's making it official. It's telling the world, here we are, we're opening our doors, we're doing business. If you need money to take your idea a little bit further through a bank loan, through an angel investor, or through selling stock perhaps at some point in the future. Or if you're a nonprofit, perhaps you want a grant to support what you're going to do moving forward. So you might need to become a business entity because you need funding. You want to protect yourself, as I said before, from liability. So you hire some employees and they do something foolish. You don't want to be personally liable for their foolhardiness. It's one thing for the business to be liable. It's another thing for you to lose your home because of that act of the employee. So these are steps you can take to protect yourself. Strategic growth decisions, how you grow your business and how you long-term plan to grow your business. How you want to hand off your business. Perhaps you want this to be a family business and you want to hand it off to your children someday. Becoming an entity helps you do things like that. We're going to talk about partner disputes. So you get into business with someone. Having an entity helps you to legally resolve those business issues without making it personal. All right, so we'll kick it off with the big confusing table. I put the big confusing table in there right off from the start because you can see the issues, and you can see the different types of entities in the state. I'm putting this in here as a placeholder. We may come back to it in this presentation, we may not. However, you will have access to it easily in the presentation when we provide it back. So as you'll notice across the top we have, and I'm just going to explain the table, I'm not going to go through it all. Across the top you have the sort of business form, the type of owners, the liability protection, how your business would be governed, how decisions would be made, how you can gain funding in that particular entity type, what it means for your taxes, and how extensive are government requirements of this particular entity type. In other words, how much paperwork am I going to have to do with the government for this entity? And you can see each entity has different responses to those in those different columns. And we're going to go through those and talk about them now. All right, so I've got this great business idea. I, surprise, surprise, want to sell maple creamies in Vermont. What should I do next? What are my next steps? Well, of course, as everyone knows, you've driven down a Vermont road before and you've seen the little stand at the side of the road with a little box next to it that says, take the zucchini and put 25 cents in the box, right? So we know that there are people out there that do things on a very small scale who just are trying to, say, get rid of some of their zucchini come August and earn a little money too, right? And those are most often what we call sole proprietorships. There's somebody who is just putting some good or service out there and is earning some money for it. A sole proprietorship often doesn't declare. It's the default entity type in the state of Vermont, for a single person entity. So when you are a sole proprietor, there is no separation between you and the business. You are the business. So any liability that occurs for that business comes back to rest on you. What that impacts for you from that perspective, let's say you sell a bad zucchini on the side of the road and it causes someone to get ill. They could sue you for that. And when they sue you, they would sue everything you own. Everything you own would be on the block to pay for that liability. There is no differentiation between you and your business of selling zucchinis for $0.25 a piece on the side of the road, right? So you have become a sole proprietor. Sole proprietors, from a tax purpose or a tax perspective, have what we call pass-through profits. The profits come directly into your checkbook. There's no difference between your checkbook and your business's checkbook. They're one and the same. The tax ID number for a sole proprietorship is frequently just the person's social security number. Sole proprietors, characteristically, you see them, a lot of consultants are sole proprietors. They run their consulting business. They earn some money on the side. Maybe, as we all know in Vermont, we often have a side hustle, right? And for most of us, it's probably not the zucchini stand on the side of the road. So that side hustle, say I do art on the side and I create PowerPoints for people on the side. That could be my side hustle, and I could charge $500 a piece for PowerPoints. And turn them around in 3 days for people when they ask for them. I would be a sole proprietor if I hadn't registered any other kind of business. Just taking the $500 per PowerPoint that I do, and putting it directly into my bank account. That does not mean I do not have to claim it as income of my taxes come tax season. I do. But as a consultant who does PowerPoints, obviously I would not have any other business entities or trappings around what I was doing. Sole proprietors can still do deductions, right? I could deduct the computer I used to create those PowerPoints on my taxes as an expense of doing business. So you can still do some deductions, and you don't lose the ability to take some of those business deductions. But as I said, the big thing with a sole proprietor is it's a default entity. It's an entity of one, and it's usually you are the entity. It's always you are the entity. Partnership is just like a sole proprietorship in most instances, except it is the default for more than one. If you're doing business and you and your neighbor grow those zucchini and you put them on the side of the road and you split the money when it comes back, you're in a partnership. All right. Partnerships can be formal or they can be informal. An informal partnership is you and your neighbor in the zucchini, right? And you put it out at the side of the road and you agree to split the money, and your neighbor likes to do the weeding and you like to do the planting and the watering, and you've split it up that way. Your neighbor got the poor end of the stick, but you've decided that this is how your partnership is going to work. You can do it orally, like I just spoke it out, and it's nothing more complicated than that. And you've agreed to share the profits 50-50 and the work not 50-50 if he's doing the weeding. So in that instance, right, we have an informal thing where it's very basic and can be dissolved in the same way it was started. There's no more to it than that. Sole proprietors and partners generally don't register with the state. They just are. Partnerships generally want to have their own tax identification number. Now, partnerships can get really formal, right? Partnerships can have a partnership agreement that says all kinds of things about the terms and conditions and who does what and how it's done. And partnerships can choose to register, just like sole proprietorships can choose to register with the state. They don't have to. Sole proprietorships and partnerships can also have separate tax ID numbers and not use their social security number. You have to apply to the federal government for what's called an EIN at that point. Again, partnerships do not, in the state of Vermont, at any rate, have any liability protection. In other states, there are things called limited liability partnerships and things of that nature, but that does not exist in Vermont. So if you're partnerships, you have full liability. Any questions about sole proprietorships and partnerships before I leave them, because they are our greatest risk factors?
So I just want to mention, if you have a question, you can unmute and ask it, or you can put it in the chat. There was one question in the chat that came up, Jeannie. Can I read that to you?
Yeah, please,
Okay.
and jump in.
Great. So Stephen asks, can you please state the legal parameters such as income or employees? And if that's not clear, maybe Stephen, you can unmute and just elaborate a bit more.
Yes, sure. It's very simple. Just speaking categorically, is there an upper limit on the income that you can have in a sole proprietorship before
No.
you're compelled? Okay. And the other question, can you have employees?
Yes.
Okay. And is there a limit on the number of employees?
Nope. There's no limit.
Okay,
the limits are legal practicality for you as an owner at a certain point with a sole proprietorship.
Well, you do have a lot of danger when you start having many employees and you're still personally liable rather than having the LLC, which I know is coming. So that does answer my questions.
Yes. Are there limits on what you can do in a sole proprietorship? Not legally, however, practically speaking, and just don't do it. Don't ever do it. It's not a good idea, right? I hope that, and that, thank you, transitions well into why you want to have a limited liability company, right?
Yeah, so I won't ask you to answer this question now, but I am a sole proprietor, and it appears that my insurance expired, and I'm worried about that. But anyway, we'll talk later.
Kiddoke. So limited liability companies. What are limited liability companies? A limited liability company, this is where we titled this legal
Jeannie,
let Yes,
Jeannie, I'm sorry, I couldn't get off mute fast enough. I apologize.
no worries.
There was another question that came in. I'm
Sure.
sorry to interrupt you. Let me just, I had it. So Lynn asked, does the split have to be 50-50? And I'm assuming she's referring to partnerships.
No, partnership can be whatever you want. However, the assumption at law is that it's 50-50 if it's not otherwise specified. The assumption at law is that it's even unless you specify otherwise. And when you specify otherwise, it's best to have that in writing and not on the back of a napkin, so to speak, right? It's best to have that in a document that has partners' signatures on it.
Thank you, Jeannie.
And why, let's talk briefly about why it's important to have everybody's signature on these things. It's important to have everybody's signature on these things because what you really want to do is ensure that everyone was made aware of what that document contains, right? It's how we at law say everybody saw this, everybody read it, and everybody agreed it. I'm touring colleges with my daughter in the Northwest today, and when I signed into the hotel yesterday, do you know how many places you have to initial to say that you don't have a pet these days? It's crazy. So that is about making sure at law I'm aware of what the liabilities would be if I snuck a dog in. All right. Same in a partnership. You want to make everyone aware of what the situation is, particularly in a situation where the shares aren't split evenly. Right.
I had a question about sole proprietary. How do you, or do you, how do you, I'm retired, so I get, a pension. Do you separate the money that you might make from your, like a business versus, or did you include it in your income, or how does that work?
Um, Repeat the question. I'm sorry.
Okay, I'm
There was
sorry.
a
I just
distraction
jumped
here.
right in because that's my main question, main concern. Okay, so I'm retired and I want to start a business. And I was thinking it's just me, sole proprietary. How do you account for the income you might make from like your pension versus, what you might make for your business and maybe make deductions? How do you, or are you to keep them separated or what?
You get thee to an accountant, not a lawyer. Because the running joke among attorneys is we became lawyers because we were people who were bad at math.
Okay.
Now, setting that aside for a second, you probably traditionally have been filing a 1040 easy, and you're going to have to step into the wonderful world of 1040 where there are all of those deductions set aside. And
Okay.
I'll just preface that for
Okay.
you because that's how it'll
Okay.
work.
Okay.
However, having
Yeah.
said that,
Yeah.
there is, and well, lots of people are sole proprietors and do business perfectly well that way, and lots of people have partnerships and do business perfectly well. From a legal perspective, there is no reason not to have a limited liability company.
Okay.
There really isn't. It is so easy to do in the state of Vermont, frankly.
Okay.
And we'll talk about the DIY aspects of this in a bit.
Okay. Good. Okay.
But you really are going to gain so much security from having a limited liability company that there is no reason not to, unless it's let me give you a situation where a lawyer would say, sure, be a sole proprietor. I do a one-off training that I get paid $1,500 for once a year. Yeah, don't become a sole proprietor or don't become an LLC for that. That's silly. If I did 3 or 4, become an LLC.
I got you.
Right.
Okay. Got it.
Some of it's volume, things like that, but one-off sole proprietor, mini, ensure that you don't take on any personal liability you don't need to.
Okay.
So what do limited liability companies do for you? First, they can be one person to many people. There's no upper limit on how many people can be part of the limited liability company. Limited liability companies can be member managed or manager managed. You can have many members of an LLC. You can have many managers of an LLC. How you choose to operate your LLC is about your operating agreement. And it's writing It's much like what we do as as people in the United States when we have a will, right? We say we want to operate it, we want it to operate like this upon our death. Well, in the case of a limited liability company, you say, I want it to operate like this while I have an entity. Having that kind of document that talks about how you're going to operate your limited liability company is what sets it up as separate from you as a person. Okay. And it is crucial if you want to limit the liability and the legal liability you have and make it your company's liability and not your personal liability, and divorce the company assets from your personal assets, the best way to do that is by ensuring that you set up an operating agreement of some type and you follow it. Now, the operating agreement can have three parts. It can say, I will, I will have no partners. There is no way people can enter into, I will have no other members of this limited liability company. This limited liability company will serve customers directly and offer services around web development. This limited liability company will be dissolved if something happens to me in the future, my death or incapacity, right? It can be as simple as that. It can be a few lines. I will meet once a year with myself and file an annual report with the state. Okay. It can be really simple. That it can be a one-page document on your limited liability company. It doesn't have to be much, but it has to be enough to separate you as a person from the company and how the company exists. The company exists distinctly from you as an individual. All right. Even if you control it and manage it and own it, it is not you. What does this do for you? It sets up a liability shield. And the liability shield is really crucial to your ability to separate your personal possessions, like your car, like your house, like your retirement income and your 401k, right? Keep all that stuff separate so that if somebody sues you, they can't attach your assets and take that from you in the event of a lawsuit. All right. So limited liability company is a good option for folks that want to limit liability and reduce risk of running a business. It's another way to handle other aspects of segmenting ownership and how something will be operated. So for example, if somebody just wants to be a silent partner and give money to the startup of a business, it's a good way to bring them in and give them a share of the profits, even though they may not control and run it. And so you can lay those sorts of things out in an operating agreement as well. We were going to get to some of these others, but as I remember this slideshow, I'm sort of supposed to be going through these and I'm diving too deep now. So we're going to go through a list here a little bit more quickly. All right. You can also
Jeannie, should I hold questions? Do you want to get through this?
hold the questions. Let me get through this and then
Gotcha.
we'll dissect a little more.
Okay.
Business entity options. Furthermore, you have corporations. You'll all have heard of an S Corp and a C Corp. Those are two types of corporations. They differ mainly in how they allocate shares of stock. Right. In Vermont, we do cooperatives. Cooperatives can be consumer owned, so like your local food co-op, or they can be worker owned, like King Arthur Flour. All right. They're really interesting particularly for established businesses as a way of thinking about their legacy, and how maybe they don't have family, but they want their business to continue after they depart it, either through retirement or in other ways, and they want to turn it over to the workers. Benefit corporations, really interesting. One of the things about corporations is they have a fiduciary duty to the shareholders to earn money. And that is their primary duty, and their primary reason for existing is to earn money. With the advent of benefit corporations are interesting because you can say our mission is to engage in stewardship of the environment first and then earn money. So you can change the value system of your company by being a benefit corporation. And it's a very interesting sort of new thing that we're coming to is people don't want to be nonprofits, but they want to be a company with values and be recognized as that. And then you can have a nonprofit company, which generally we hear about as a 501c3. And it's a non-taxed entity, generally speaking. And these are public benefit corporations in Vermont. So thinking back through all of those entities, how do we choose? There's a lot of entities. They bring a lot of different things to us. Sole proprietorships are the simplest form and their default. Partnerships are simple and their default for more than one. And then we have all these other complicated structures and ways of doing business. What's next? Well, you've got to think about your goals for your business. That's the first step. So what is your goal? Is your goal to have protection from risk and liability? Do you want to make sure that you keep your house? What if you have co-signed your kids' mortgages? This is something, particularly with the Gen Z crowd, we're thinking about more and more as parents who sign on to their kids' mortgages because unfortunately their kids can't afford a house and can't get a loan otherwise. So parents are supporting and helping kids. If you're doing something like that and you don't limit the liability and you don't have liability protection from what your company does, if your company sues, they can attach your assets and your kid's house. This also goes with parents who take out loans to help us start a business, right? And they take out a second mortgage or something of that nature. Those assets can be seized if you don't set up the proper separation of assets. So liability protection is a concern for many people. Tax savings, right? You can do better with taxes through an LLC potentially than you can through a corporation where there's double taxation. There are some strange things that happened in the last series of tax cuts under President Trump that make it actually better to be a corporation than an LLC in some instances. And talk that over with your accountant. It's a specific grouping based on income. Investments or donation tools. You may set up a business because you want to be able to receive donations and you want to make those tax exempt, or give people tax credit for their donation. You can't do that if you're for profit. You might want to accept people's money in and give them shares of your business. All right. You can only do that with certain kinds of entities. You want to be legitimate and you want to create structure to facilitate the running of your business. These are concerns people who are starting new businesses have. You want to communicate your mission, like I was talking about with the benefit corporations. You want to say we're a company with values and structure. And you want to have legacy planning. You want to think about, hey, someday I want to pass this to my workers, or I want to pass this to my kids, or I want to pass this to my other partners that I'm engaged with. Whatever your planning and your intents and goals are, you need to really think about those before you create the entity. Otherwise, you're in a situation where you have to change entities, and it's a bit like changing horses midstream. You don't want to do it. It's a good way to get wet. So separating personal and business liability. And here's maybe where we want questions if they pertain to topics.
Hi, Jeannie. Sure, yeah. Jan had a couple of questions I think is relevant to this section. Jan was wondering, first of all, how do you switch from a sole proprietor to an LLC?
First, you get some assistance doing it, right? Because you're going to have to create an LLC in most instances and buy out the sole proprietorship. Or you create and generate the LLC, and you, as the owner of the sole proprietorship, would invest all of those assets into the LLC. and it can be your written investment in your LLC. So there are a couple of different ways to do it. And it's going to depend on whether you've had it set up under a separate tax ID number. How have you been using a doing business as name? Do you have things that are owned by the sole proprietorship? And how are you going to transfer those to the LLC? So it can be a little complicated. But generally transferring a sole proprietorship to anything else is the easiest of the transfers and probably takes you a half an hour with an attorney. So pretty lightweight stuff. It can be done. It's not that hard. But it's worth talking to your accountant to think about tax ramifications and worth talking to an attorney for a few minutes on your specific situation.
Thank you, Jeannie. I'll ask Jan if she has any follow-up question to that, if she wants to unmute herself. But Jeannie, that's probably a really good opportunity to plug the Vermont Law Center's services. Maybe at the end.
I have a whole
do that.
slide dedicated to
Oh,
that.
perfect. I should have known. Jan, Jan, do you have any other follow-ups to that? I know you've got another question that I have queued up here to ask. If not, that's okay. I'll just move forward with it. Okay, I'm going to move forward with it. So she asked, when registering a business with the Vermont Secretary of State in Vermont, they do not want an operating agreement. And if they, I can't.
Operating. Let me see if I can.
Yeah, and if sent, it will reject the application, but important to have always for a business.
Yes. So there's a difference between what we do publicly and what we do privately with businesses in the state of Vermont. What we do publicly is we register the business and we say we have an LLC and we say these are the people involved in the LLC. We do not say here's how our private entity is governing itself. And the government in the state of Vermont does not want to know that. In fact, they tell you, please don't tell us. We don't want to track any of it, right? This is mostly about how you do business. And if there were a lawsuit, it helps prove that indeed you treated your LLC as separate from your person and your personal assets. And having that operating agreement shows that you were acting as a distinct and separate entity from your person. And that's one of the reasons to have those operating agreements. They also help resolve disputes. The court will look to an operating agreement if there is a dispute that becomes litigation, right? And having that in writing, signed by the parties and agreed to by everyone involved, really supports whatever outcomes that you'd like to see. And really what an operating agreement does on some level is you think about potential disputes in advance and you try to resolve them in advance, right? This is your Aurora, would you possibly mute yourself here? Thank you. So what we're trying to do with the LLC and setting up that operating agreement is have that guidance for how we're going to run and operate our business and what happens in case of death, in case of addiction, in case a partnership or a partner, one of the members drops off the face of the earth and doesn't get back to anybody about anything and quits performing their duties in the LLC, right? Oftentimes we want to carry on with the company, even if somebody in our group became flaky. So that's going to give you that capacity, and the courts are going to uphold that capacity if you have it written in an operating agreement. So an operating agreement supports this notion of your business as a legal entity. All right. Does that make sense?
I think so.
Good.
There's one more question came in.
Sure.
Would you like me to ask her? Okay. So Lynn asks, if you have a Vermont LLC, can you include assets you own in other states?
Yeah. Absolutely. Again, if you have assets, if you're a Vermont LLC and you have assets in other states, those assets can become part of the Vermont LLC. If you are doing business in other states, you will have to do what's known as registration of a foreign company doing business in that other state if you have a physical location. A lawyer can help you with that. When you start doing business in other states, there are some complexities, particularly around sales tax, reporting, employee wages, things of that nature. When you start crossing state lines, it's an additional layer of complexity. It's not unreasonable. For example, lots of people in White River do business in Lebanon, New Hampshire, right? And the cities are the towns are right next to each other. They are certainly, the populations move back and forth between them. And there's no reason that somebody who is in White River might not have an asset in Lebanon and vice versa, right? But you can create your business and be a business that is registered in Vermont and just happens to also do business as a foreign entity in New Hampshire. I know it doesn't seem foreign, but it's foreign to New Hampshire, right? By that, I mean that you didn't initially register in New Hampshire, right? Does that make sense? Good.
Jeannie, Stephen Marshall asks, such a thing as operating agreement for a single owner? And if that's not clear, Stephen, maybe you can elaborate again on that.
Well, Gene was saying that having an operating agreement was helpful for resolving conflicts and for separating your personal life from your business life. And under the idea that you want to separate your personal life from the business, I wondered if an operating agreement or sort of a charter for your business, something, some sort of document, even if you're the only person who has any ownership interest.
Yes, absolutely. It's akin to the question of, do I keep separate bank accounts? Yes, absolutely. It's part of that separation process. You're creating your own entity that is distinct from your personal assets, your house, your car, your everything. And to do that, you kind of want a playbook how you're doing that and how it will work. And even if you're a single individual, set up a basic, this is how my LLC will operate. It also gives you some opportunity if you ever did decide to take on a partner that you could. Often married couples will be in an LLC together. And again, having those documents, God forbid there should be a divorce, it's good to have that operating agreement that states how things will be handled if the parties find that they can no longer work together, right? And in the case of the single individual, maybe what are the conditions that you would sell the company under? What are the conditions that you'd merge under or buy up another company? You can put all kinds of things in your operating agreement.
So is there any formality in it, or such as filing it with your lawyer so that you feel beholden to your own agreement, to your own document?
You can.
I'm just asking.
You can certainly. Is there a necessity to do it? No. The fact that it exists is in and of itself what makes it the operating agreement. You have to be able to produce it should it become necessary in a court of law. It is good. It is good if the operating agreement that you produce in the court of law over a dispute was not signed the day before you enter the court of law. So you want this to be a long-standing operating agreement that you've worked under.
Thank you.
Things you do in advance, not at the time there's a crisis, right? All right. So separating personal and business liability. We've talked a little bit about this. I'm gonna hit the high points here. Sole proprietorships, there's no separation. They're the default if one person is doing business. All of your assets are the business assets, and there's really no way to segment them. The one thing a sole proprietorship can do to help insulate themselves from risk a little bit is get good insurance, right? And that is open whether you're a sole proprietor or an LLC or a general partnership. I will say that your that your insurance and your general liability rates could be higher as a sole proprietor than as an LLC because there's more risk. General partnership, same as the sole proprietorship, except it's more than one person doing business together, and liability gets messier in the case of a partnership because the court will try to distribute liability evenly among the partners in some cases, and in some cases just to one partner or the other. And it can be a little uncertain, right? So let's say you have a general partnership with two people who are doing business together. They agree to, one party does all of the financial investing and the other party does all the operating. The liability is incurred because of something the operator does. The courts could come along and say, hey, because it's a 50-50 split, we're going to split the liability 50-50. And I know all you did was give money to this person or to this partnership, but you're still going to incur 50% of the liability. Or the court could hear a lot of evidence about how they shouldn't incur 50% of the liability, or you could end up with multiple parties in a litigation. It's a mess, right? And so that's another challenge with general partnerships and managing risk and managing liability and how those things play out. Limited liability companies, there creates a separation between you and the business. And you'll note the slide says, but it's imperfect. It is imperfect in the sense that oftentimes people who have run sole proprietors for a long time will treat the limited liability company like their own checkbook. And they will write personal checks out of the limited liability company and other things like that that do what lawyers call commingling. You do not want to commingle. If you want to separate your entity and your person, separate bank accounts, separate tax ID numbers, separate vehicles for the business, separate locations for the business. Don't do business out of your home. And I know in this world that's kind of weird, right? But yeah, have an office space. Anything you can do to keep your limited liability company separate from your person is going to be really helpful here in maintaining that limit on liability and reducing risk. And as I said, it's imperfect because if the court looks at it and you've been treating the LLC like your own personal checkbook, they're going to say, this is just a masquerade. You're really a sole proprietorship that happened to file some forms with the Secretary of State, and it doesn't count. Okay, so not only do you have to file the LLC forms, your job is not done there. You have to then go on to treat it separately. The books are separate from your books. The assets are separate from your assets, and they can't be commingled, right? So you must follow all the formalities and the government requirements of an LLC, and you must file reports annually, which is in the state of Vermont not hard. Can somebody remind me? I'm sure Simon, is it Simeon or Simon? I'm sorry.
Simeon, that's okay.
Simeon. Remind me in the annual reports, is it still a checkbox that you send in annually with a $35 fee? I think that's.
I know it's a $35 fee. I can't confirm that.
I think it's a checkbox and a signature. Yes, we still exist. That's the annual report.
You have to go online, and it is a couple of check boxes and a nominal fee.
Yep. Okay. Thank you, John. Yeah, it's small. It's nothing.
Yeah.
Right. People say file an annual report, and it sounds scary. And I just want to make sure people understand that it's really not scary. It's check boxes and $35. It's not. So
I think in some cases it's every 2 years now too. I'm not sure it's every year anymore.
Okay. So I mean, it's not a big lift.
Yeah.
The biggest lift is not missing it, right? When they send it to you, the notice to you in the mail, don't miss it is the big trick. All right. Holding board meetings. If you have said in your operating agreement you're going to have a board and hold meetings, you have to do that. And sometimes you are a board of one. And it's weird, but yes, you hold the meeting with yourself. You call the meeting to order yourself. You say you count yourself as the member that's there, and you note that you had a meeting and you're done. but you had your meeting. Okay. And you actually have to do those sorts of things. All right. And that's part of those formalities that you have to really follow. Now, here is a place where the lawyer in me is going to bleed over a little bit. Document the meeting. Write down on X date at X time, I held a meeting. I was there. I took attendance. I asked if there was any business before the board. I said no, and the meeting was adjourned. You can do that. It's done. Then take that piece of paper you wrote on, or the printout from your computer or the file, save it somewhere where you know where it is, and it becomes a record that you engaged in those formalities. Okay. Make sure you do the formalities and document them. If you do the formalities, if I have that meeting with myself and I don't document it, it's like it never existed. So make sure you do the documentation step. All right. It seems crazy, and it is sort of, like you're talking to yourself in that little board meeting of one-on-one, or one by, I don't even know how to say that, but you're by yourself in an echo chamber doing this, right? So make sure you document it. All right. So questions about separation before I leave that concept, because we're going to go on a little bit to taxes.
Jeannie, Simeon here. This may fall into this wheelhouse, but Jan asks, what type of insurance should you get for a sole proprietor?
It depends on the business. I'll come right out and say that. Talk to your insurance agent. They can help you. General liability, definitely. Okay. There are other specifics. In today's world, I would say any business that is keeping any electronic records of their customers without cyber insurance is making a mistake. You really need cyber insurance today, especially with the new legislation that the state of Vermont put through. Okay.
Jeannie, Ada asks, can I sell my business if I'm a sole proprietor, or do I need to be an LLC?
You can sell your business as a sole proprietor. It's harder. It's more complicated. It is easier to sell your business as an LLC. Right? If you sell your business as a sole proprietor, it's really about what we call selling assets. So you would be selling, it's like chopping up your business and selling all the parts that somebody else then puts together to create the business you had. All right. So it would be done through what we call an asset sale. So yes, you can do it. But unlike an LLC where you could just say, I'm selling my LLC, you can't do that. You have to sell the individual assets. All right. Other questions?
Like we're good.
Okay. So let's talk taxes. Some of what we do when we choose an entity is choose a tax structure that we're comfortable with. Not that we're comfortable with any tax structure, but tax structure means, how am I going to pay taxes on this business? And the first thing I want to come right out and say is taxes are complicated, and it has to do with your personal finances, and then the business's finances and how those come together since you're the owner, right? So what I'm telling you right now is going to be tax structures and what different entities mean for the tax structure, but it is not in any way, shape, or form accounting advice, because that's personal to you and your financial situation. All right. So I'm going to say that for a disclaimer right at the start. LLCs have what we call pass-through taxing and taxation. They can be taxed like a partnership, or you can opt, if you have registered an LLC, a limited liability company, to be taxed as an S corp. So LLC can be a disregarded entity for IRS purposes, or you can choose to be treated as an S corp. It is the entity of choice for taxes, which means you are not, just because you registered for an LLC, locked into doing your taxes one way or another. All right. LLC, the owner is not on the payroll in most instances. And you can, multiple members of your LLC can be paid directly through partner, just direct checks from the LLC. All right. And when we say no payroll, obviously, if you have employees, you have payroll, but the owners are not part of the payroll. Okay. And your taxes, you would file a partnership tax and do K-1s if you opted to be treated as a partnership. If you opt to be treated as an entity, you'll file a business tax. And you will do a filing as an S Corp or a C Corp. Okay. Corporations. If you are a corporation, an S Corp or a C Corp, you can do payroll. The owners can be paid by payroll, but you end up being taxed twice. You're taxed as a company, and the company's profits are taxed. And then you're taxed as an individual on your payroll, right? And that's what the double taxation is. The company is first taxed, and then the payroll of the owner is taxed. Okay. In the case of the LLC is not taxed. You don't get taxed on payroll and on the LLC. All right. Okay. Debt, investment, and donations. This also could have just been called funding your business. All right. What difference does it make? Do entities make to how you fund your business? If you are planning to accept grants and you want to give people tax write-offs for those grants or donations, you are a 501c3, right? That's it. You have to be a public benefit corporation. The IRS gives you the capacity to say, hey, somebody donated money to you, you can give them a tax benefit for that. All right. Okay. So that's nonprofits. For-profits are the way you get capital investments. So if you want to take angel investments, or you want to get loans from a bank, or you want to get small business grants from the government, right? If you want to sell shares and you want to have people who have invested in your business without taking control of your business, you can sell shares of stock, right? You can't do any of that without having an entity, usually an S Corp or a C Corp. In some cases, angels will invest in LLCs. And certainly you can get bank loans and small business grants as an LLC, right? Nonprofit entities. If you want to be a nonprofit entity, you have to have a charitable purpose. One of the things about nonprofit entities, and I'm going to spin a little on nonprofits here for just a second. People don't realize that nonprofits can sell goods and services and earn money. They can. What they can't do is, if they have extra money sitting there at the end of the year, they cannot pay it out to their shareholders or to their owner. A nonprofit doesn't have an owner. It has a board of trustees. Okay. You lose control. You don't have ownership control if you have a nonprofit. You can be an executive director of a nonprofit. If you have a board who is a good board, they can invest all the control in you. But it sometimes doesn't work out, and people lose control of their 501c3s, even if it was their brainchild, they thought of it. It is not a true entrepreneurial experience. However, it may be the best way to legally enable some of your goals. Right? If you start this nonprofit, you get a board of directors. As the executive director who is running the nonprofit, you could still get paid by the nonprofit for the work that you do. Right? It's not like you wouldn't take home a salary. You could take home a salary, but you wouldn't have ownership of the nonprofit because no one owns the nonprofit. All right. Questions about that? People often have questions about this. When I bring up that, nonprofits can earn money, people are like, what? What do you mean? They do. They do it all the time. They sell services. When you go to a museum and you buy the tchotchke in the gift shop, they're earning money.
Jeannie, a couple of questions came in. I'm not sure to the degree you'll feel comfortable addressing it, but I'll put it out there. Jan asks, what do you need to start for tax accounts with the state of Vermont if you are a small farm? Will you go over workers' compensation and when you need that for business types?
Workers' compensation, you need that as soon as you hire an employee. Done. And if you go to the Vermont, the Department of Labor, I think, their website is very helpful. As an employer, you go in, you go through, and they help you. The workman's comp insurance is part of the whole having a payroll thing. Even as a farm, you'll have all of those things that you fill out. It's in the forms, it's through the state government, and the agency will help you do it. By and large, you won't see lawyers get terribly involved in those sorts of things or those sorts of questions. Usually it's between you and the state Department of Labor. They're going to help you identify whether workers perhaps are independent contractors versus real employees. But in Vermont, it's safest just to call them an employee and do the workman's comp.
Jeannie, Jillian asks, is it possible or desirable to convert from a sole proprietor to a nonprofit?
It is possible to convert from a sole proprietor to a nonprofit, and in some cases, it's desirable to do so. It is a door that's open. And as Simeon indicated at the end, I will tell you that we do offer up to 10 hours of free legal services for businesses that qualify. All businesses on this call, by working with CVOEO, you qualify. So we are able to provide these 10 free hours of legal services to you. You have to go through an educational consult that can work specifically with your issues. And we get you to a lawyer, pair you, and that's a discussion to work with a lawyer on. It really is, because it's going to be very specific to your circumstances.
Jeannie, just to put out a quick disclaimer, the folks who are attending, not all of them are folks that necessarily we're working with or would qualify for our services. I recognize some people that we work with already, but some I don't. So for those that who are not working with our program, it is best to connect with the Vermont Law School to learn if you do qualify. But generally, if you qualify for our program, you're going to qualify for theirs too. So just to clarify that a little bit.
I would go a little further than that. Our qualification is that you be in a rural community, and by federal standards, everyone in Vermont lives in a rural community except certain specific neighborhoods in Burlington. So by living and breathing here, you're rural. Sorry. But as rural, you qualify. We have never turned anyone away. And so I'll throw that out there as well.
Great. Thank you, Jeannie.
You're welcome. So that's a little bit about debt, investment, and donations, how it happens, how it works within entities, and why entities are important to thinking about debt, investment, and donations. The other piece I'd like to tie in here, the difference between a sole proprietor and an LLC. You can take a loan out in the name of an LLC and secure it with assets from the LLC and not make it part of your individual personal assets, right? And not make it connected to your personal assets. And it really does help you if your company were to go bankrupt, for example, it would consume the assets of your business, not your home, right? So there are some ways to sort of insulate you in case of financial exigency and other issues that can come up in a startup business, right? So I would say that liability piece is nice.
Jeannie, I'll just confirm this with you, and also I want to identify that Jacob has a question. If you are an LLC and you do get a loan, very often the creditors are going to ask you for a personal guarantee, though, on that.
That's why I said assets. You would have to secure it with assets from your LLC. So, for example, some LLCs will own a building or a farm, right? And if you've separated your personal home and your personal sort of property and land often can be separated from the agricultural area, and you've made the agricultural area part of your LLC, you can secure it with the land and not with your personal home. And in those instances, when you can secure a loan in that way, it won't impact you personally. So, and what Simeon says is absolutely right. 9 times out of 10, you're going to still end up signing for it as the guarantor of a loan.
Jeannie, can I, is it okay if I
Yep.
run Jake's question by? Great. So he asks, do benefit corporations, as you mentioned earlier, allow some mix of being able to receive loans and also donations and grants?
You can the grants are going to be specific to whatever type of organization. There are grants out there that go to for-profits, right? And it's just going to depend on the grant and the type of grant. Some grants go to LGBTQ businesses or women-owned businesses or veteran-owned businesses. So lots of grants are out there for small businesses and for starting up. So that's not really going to enhance your capacity to gain grants unless the grant is specific to something that's part of what you're doing as a benefit. For example, if you're a benefit corp that looks to reclaim Superfund sites for public use, and this grant is specific to businesses who look to reclaim Superfund sites for public use, obviously you're going to qualify for that as a benefit company that's identified that as part of your mission, maybe to a greater extent than someone else that's doing something with Superfund sites, right? So the grants are about what the grant is for, right? As far as accepting donations and giving tax write-offs, only 501c3s can do that. Only public benefit corporations, not benefit corporation. A public benefit corporation has gone through all the hoops at the IRS of qualifying for a 501c3. And they are a charitable organization, and that is why they can give tax write-offs for their donations. Other organizations cannot.
Thank you. Jacob, any follow-up question? Nope, he says thanks. Okay, great. Thanks, Jeannie.
All right. So legitimacy and structure. We've talked a lot about legitimacy and structure throughout the conversation today, but I just want to sort of focus in here for a second on why having a business structure and specifically an operating agreement or bylaws of a corporation are important. It gives grants and investors often want board oversight of some type. And when it's written into your operating agreement, that you have board oversight and you're not a party of one controlling where all the money from the investors go, where all the money from the grants go, it makes people feel a lot safer and more secure with their investment in your company. So that's one reason why setting up a structured business that follows certain legal order can be helpful to you, right? Some loan and grant options are unavailable without at least an LLC. So in some cases, they're not an option for a sole proprietor. You have to be an LLC to get the grant. I don't know about you, but there are some times when just having the playbook is helpful for me. It helped remind me of what the procedures are and what the steps are. It's like having that checklist of things you've got to do before you pack to go on a big trip. You've got to remember everything that you're supposed to take with you and all the things you're supposed to do. And it's nice to have that written out. Sometimes these legal documents act in that way to really help you have the structure and the rules for running a business, and it ensures smooth operations of your business. It's like having a business plan with the authority of law behind it, right? The agreement, as I said before, doesn't have to be complicated. It can be bare bones, and even bare bones has value, right? When you're thinking about your structure and your organization, think about the 7 Ds. The 7 Ds are death, divorce, addiction, disease, debt, and dispute. Okay. When you think about these things, you need to address them or the possibility of them in your operating agreement or in your bylaws, so that there are ways in which the entity behaves when something like this befalls the owner. All right. Any questions about that? And I've covered operating agreements in a lot of different ways before we got here. But hopefully those 7Ds will help you think about the triggers for operating agreements and what you should be thinking about when you do those operating agreements.
Jeannie, Jan is asking a clarifying question. Are you able to discuss the difference between member managed and manager managed LLCs?
Yes, I am, and I'll get to that in a minute.
Thank you.
Actually, maybe I'll get to that now. All right. I thought I had another slide in here that I don't have in here. So member managed and manager managed. Manager managed LLC is when there are 5 owners of the LLC and they delegate the management of the LLC to one of the managers or employees of the LLC, right? And member managed is where the members of the LLC are specific hands-on managers of the LLC. Does that cover the distinction there, Simeon?
Jeannie, so just to clarify, is that 5 like an important number to remember?
No.
Is that just that was part of
I
your
was an example. It was an
Gotcha.
example. Let's say there are 5, 20, 30, whatever, it doesn't matter. It's about the act, right? So are they hiring somebody to manage the company, or are they doing it themselves?
Jan,
Okay.
any follow-up to that? Okay, so I'll assume it's good. Thank you,
Okay.
Jeannie.
All right. So as we said before, the reason for a benefit corporation or a co-op, it's communicating your mission and your brand, right? The entity you choose can reflect your values and help distinguish the business in a competitive market. This is the same reason we do benefit corporations today on one hand. On the other hand, I'd like to think that there are folks that actually believe in their missions and want to see those things go forward. But it's also about branding, right? And it's also about getting it out there that you do business a certain way. All right. For a 501c3 public benefit corporation, obviously they're out there doing their good work. And it's a charitable organization. So that one's pretty clear and obvious. But in the case of a benefit corporation, where the income is still going to the owners of the corporation, right? You can put it out there that your first priority is not money, it is some other good. And that is a really great thing. So we often hear the phrase benefit corporation and B Corp. They are distinct. Benefit corporation is a real legal entity. B Corp is a certification. And what they do is they check in and they make sure that you're towing the line as a benefit corp and really holding your missions and values to be primary over financial, right? And it's almost like a benefit audit, right? And if you qualify as a B Corp, you have gone through the certification process that says you're walking the talk, right? Worker cooperative. For those of you that are interested in worker cooperatives and how to set up worker cooperatives, there are great resources at veoc.org/co-ops. And I would highly recommend working with the folks at VEOC if you're interested in this. Generally speaking, we see a lot of these shift to worker-owned cooperatives when there's a transition in ownership of some type, or any other kind of business transition. Okay.
What is VEOC, please?
Oh,
You don't know.
I can't remember what the acronym stands for.
Sorry, I'll
I'm
look
just
it up.
about to put the link in the message board to everybody.
All right, thank you. What does VEOC stand for, Simeon? Do you remember? Vermont Employment
It stands for Vermont Employee Ownership Center.
There we go. Thank you.
Welcome.
Thank you.
You're welcome.
All right. So with sort of a tie into those worker cooperatives, let's talk a little bit about legacy planning. Business succession is passing your business to the next generation. In states like Vermont that are rural and have a lot of small family-owned farms, we see the farms set up as limited liability companies so that they can be passed as entities to the next generation and the next generation of owners without the mess of probate. And those businesses, because they are separate entities and they exist without the people involved attached to them, the deaths or incapacitation or other things impacting the people doesn't get in the way of doing business. So in the case of a farm, the cows still get milked because it's all taken care of, right? It's in the business and not in the personal finances, which can get slow and painful during a probate process in the case of someone passing on, right? So one of the challenges that are often faced when we want to transition a business is the buyer doesn't have the capital to buy outright. So if you have a family farm, half of the estate has to pass before the parties involved have the capacity to buy out the other party, and then they end up double taxed from an estate tax perspective. An estate tax it's really a lot cleaner to transfer an entity than it is to transfer property and finances. And oftentimes a seller can't afford to give a business away during their life because they still need the income from the business or the farm, right? And in the case of an entity, you can make a slow transition. So you can give shares to the family members over time so that there's no running afoul of the gift tax or anything of that nature. And it ends up being a cleaner way to pass large sums of money, frankly. This is how we build generational wealth in this country, or at least one way. Divide the shares of your business entity to pass on your inheritance. You coordinate the business and personal estate plans so they don't conflict. Obviously, if you're in a situation where you're thinking about doing this, you want to make sure that your estate planning attorney is talking to whoever is setting up the LLC and the entity so that the two work together and aren't at odds with each other.
Jeannie, can I ask a quick question on this?
Sure, please.
So for those who are operating farms, and they qualify for the Vermont Law Center's program, is that something that the Vermont Law Center could help a farmer with?
Absolutely.
Great.
Absolutely. And furthermore, there's other resources at Vermont Law School for that. Our agricultural center, Ag Law Center, does a great job with some of these and has some guides and handbooks for how this works as well.
Great, thank you.
All right. So I've given you guys a lot of details today, and there's a lot of stuff involved. So the first question that comes to most minds of most entrepreneurs is, geez, I'm bootstrapping this already. I can't afford a lawyer. Well, we talked about the fact that we're providing up to 10 free hours of legal service and an hour of free legal education to go with it that's customized to suit your questions and respond directly to your needs. So that's a piece of how we can support you here. But some of this you shouldn't be scared off. You can do some of this yourself. So can you file an LLC document with the Secretary of State? Yes, they have a wizard. It's right there. It's on their site. It's not hard. So perhaps you use a half an hour or an hour of your free time to talk to an attorney about what type of entity you should get into, and then you file by yourself. The lawyer doesn't have to do it all for you. The lawyer then could perhaps help you file or help you create your operating agreement under your LLC, and that would be lovely. Right? So they help you by reading over an operating agreement you've written yourself, and they help you make a choice about entity. that makes most sense for you and your needs and fits your goals, right? That's a great way to use a lawyer, right? But you can file the documents yourself. You can file the LLC document. You can file the DBA. We have not talked about DBAs. I should take a second here to talk about DBAs. Regardless of the type of business you are, whether you're a sole proprietorship or you're an LLC, an S corp, or whatever you are in the state of Vermont, if you want to be known by something other than your given name in the case of a sole proprietor, or whatever you incorporated under or filed under with the Secretary of State as your LLC, you have to file something called a DBA. Here's the example I'll give. I talked about my creamy stand before, right? A maple creamy stand. Or no, I talked about a zucchini stand. Let's go with the zucchinis. All right. I have a zucchini stand. And I want it to be known as, oh God, Jeannie's Zucchini. Jeannie's Zucchinis there. And to be known, if I filed with the state as Jeannie Ikes LLC, to be known as Jeannie's Zucchinis, I would have to file a form with the Secretary of State called a DBA, doing business as form. And I would have to look and see if there were anybody else in the state that had a business called Jeannie's Zucchinis. And if there was, I couldn't file the DBA. If not, I could file, I think it's 25, it might be more now, with the Secretary of State to have Jeannie Ikes LLC also doing business as Jeannie's Zucchinis. All right. So I can do that myself. There's a little search tool when you go to their wizard and you check and you see if the Jeannie's Zucchinis is taken, and if it's not, you can file to be known as that business. So a lot of people have questions. Why do I have to do that? Why can't I call myself whatever I want to be called? It's because if someone has an issue with your business, if you're being fraudulent, if you're saying maybe I'm selling pumpkins and somebody wants to be offended about that and they want to sue me over it, I had to attach my name, Jeannie's Zucchinis, to a legal entity name so that people would know who to sue, right? Or who to take action against. And it's Jeannie Ikes LLC, not Jeannie's Zucchinis, because that's not a legal entity. It's just a name. Okay.
Couldn't you be Jeannie's Zucchinis LLC?
I could be Jeannie Zucchini's LLC, but there's this really silly thing in the LLC statute that says anywhere I put out a sign, it has to say Jeannie Zucchini, comma LLC or limited company. And most people don't want to put that on their sign. They just want to be Jeannie Zucchinis.
I see. Okay, thank you.
You're welcome. Get your own EIN. You have to go to the IRS. You have to say I'm a business, and you have to file for your tax ID number, your business tax ID number. You don't need to go to your attorney for that, right? I have no idea why this got globbed like that. Apologies. My slideshow didn't go as well as planned there. Apologies for that. So yes, you can do it yourself. All right. Then the question becomes, when should I talk to a lawyer? Right. I can file the state thing, or the LLC or the corporation articles by myself. I can get my tax ID number. I can get my own DBA. Yes, you can do all of that yourself. When should I talk to a lawyer in? For the hard stuff, for the stuff like trying to make an informed choice. Lawyers in most cases have been doing this for a lot of years. They're going to have experience. They're going to help you think through all of the possibilities and get you the right entity to match your ideal goals for your company. That's when you talk to a lawyer. Sitting down and talking to them, having them listen to what your vision is for your business, and having them help you pick out an entity that fits your business best. It's almost like a business brainstorming session specifically for you. It's well worth it, right? That gets you to start in the right entity, so you don't have to think about how to switch entities later. And that's a nice way to go. All right. So before you register, the lawyer can help you think about future growth plans, about transition plans, about how someday you want to, when you want to sell your half of the business, do the other members of your LLC have to agree to that? Or can you sell it without them selling their shares? Or do they get the right of first refusal to buy it? How do all these things work? Think about that at the beginning, not at the end, because at the end it becomes litigation. At the beginning, it becomes planning. Planning is much nicer than litigation. What parts should have a lawyer? Definitely. Operating agreements is the other piece, right? You can write your own operating agreement. You can get help from ChatGPT, right? Go out there, look for a Vermont operating agreement. You can start there, work with it yourself, read it over, make any edits you want. Take that document to your attorney and say, here's the things I've been thinking about. Here's what I'd like to see included. And then pay your attorney for an hour and a half of work to do the rest and make sure it's legal. There's two reasons for doing that. The first reason is it's always good to have a second set of eyes on these things, right? I don't know about any of you, but I don't like working by myself. I make mistakes. I know I make mistakes. I want somebody else to look at that document, right? That's number one. Number two, if there is a mistake, the lawyer has malpractice insurance. You have recourse. If you do it by yourself, there's no recourse. It's all on you. Okay? So keep in mind that there are protections in using a professional to support you. All right.
Thank you, Jeannie. Is this a good time to ask
Yeah.
a few questions as they
Let's
come in?
ask a few questions.
All right, great. And I'm just going to ask Stephen to unmute and ask him to, if he can state his question to you. Want to make sure he gets it right. That I'm not
Okay.
interpreting it.
Well, I'm careful about writing it. I would hope it would be clear, but so I work maybe 2 days a week, maybe 14 hours a week, just doing carpentry, and I don't think I earned more than $30,000 last year, maybe $21,000, and I do have insurance, or I had insurance. I'm going to have to fix that. I'm just trying to understand whether or not I should even, do I need an LLC? What's the lower limit?
First,
Yeah.
first, I can't provide legal advice. This is just a talk on
Understood.
on specific pieces.
Okay.
I would talk to an attorney, frankly, on your situation. I can think of lots of legal reasons where a person in your situation or a business in your situation might want the protection of a limited liability company. On the other hand, it's at that sort of maybe yes, maybe no spot. So talk to an attorney, right? If you question that, and we're offering 1 to 10 free hours of legal services, take us up on it. It's cheap insurance, right? Like free. It doesn't get better than that. So go talk to an attorney, get an hour or two of free legal advice and see what they say. Right? Because so much of this is specific to your situation. Right? Are you on roofs every day? Are you going to slide off and break something? There are so many things. So many things. Is there going to be serious damage to a home because of a missing nail? I'm making stuff up here, obviously.
Understood.
But there are reasons, right, where you'd want to be more careful.
Okay. Thank you.
So just so folks know, I'm just in the process of putting the link into the Vermont Law Center. So you will be able to access their page, so you can fill out their form to request the 10 free hours of legal services.
The last slide we have here has the tiny URL in it and the website and our email address as well. All right. And this will be part of the presentation that you get sent as well. Okay. And I will get there in just a second. All right, finding and hiring a lawyer. Quickly, finding a lawyer. We have the Vermont Bar Association Lawyer Referral Service. You can always call them directly, and they will get you to an attorney that aligns with what the questions you're asking. The Vermont Small Business Law Center, we are here to support you. It's what we do. And we're excited to do the work. We love providing these free educational consults to members of the business community. So you call, you sign up, you make an appointment, you get a one-on-one. And once we do the legal education with you, we send you off to an attorney. Why is there legal education beforehand? Because then you're empowered to ask the right questions of the attorney and make the most of the time you spent with them. We want your 10 hours to count, right? You can find a lawyer through word of mouth or Google. If you have a close associate, friend, family member who's particularly happy with an attorney, maybe talking to that person and paying for an hour is the better bet. Some of those attorneys are willing to work with our program, and we can get you sent for your 10 free hours of legal services through that attorney, and we pay the attorney. So always check that out too. It's a possibility. The other place you can find and hire a lawyer are trade associations. Oftentimes, people in business have trade associations that they belong to, and there will be a list of lawyers who work specifically on issues around folks have in those trades. I highly recommend that as a way of finding legal assistance that is really tailor fit to what you're looking for. When you're hiring an attorney, ask for a free consultation, ask for that free half an hour where they get to know you and you get to know them, and interview them like you would an employee. If you don't like them, don't hire them, right? Make sure that you're getting what you want in an attorney. Some of you may want counselors. Some of you may want people who can just read over what you've written and make sure it's all the legal boxes are checked. Some people may want a lawyer who you can call on the phone and run something by for 5 minutes here and there, right? Some attorneys charge for those 5-minute phone calls. Some do not. You want to make sure that you work out all of those business situations and all of the possibilities before you sign on with the attorney. All right, conflict check. You want to make sure that that attorney is not also an attorney for your competitor. Make sure they don't have a conflict of interest, and they will run that before they sign you on. And if they don't, they should. And you don't want them as an attorney if they're doing a conflict check, because that's unethical. All right, confidentiality. One of the reasons to hire a lawyer is because they hold everything you say confidentially. They can't be made to reveal anything you tell them. By a court of law, well, I mean, obviously, if somebody holds a gun to their head, you may lose. But other than that, they are under an ethical and professional obligation to hold anything you say as private. Right? You don't get that in many other places in the world. And it's really nice to have somebody on your team that you can be completely and totally honest with. That kind of candidness is something I completely recommend. Do not hide the ball from your attorney, or you won't get the best advice you can receive. All right. Always be direct and honest with your attorney. Cost and responsibilities. Costs of an attorney. You can pay by the job, by the hour. You can have a retainer. I really recommend that you negotiate all of this up front, so you're very clear about how you're going to be billed. You can walk in and you can say, I have this job. I want you to look over a bylaw or a operating agreement that I've written. Here's the operating agreement. Before you start this work, I want you to give me a job estimate on how much it will cost to do this. You can ask an attorney to do that instead of bill you by the hour. You can ask for that. They may not be willing to do it, but you can ask. Always ask, right? You can ask for pro bono. I'm a startup. I'd like to continue to do business with you after this. Can you provide me a little pro bono startup legal advice to begin with? And, I pay you at full freight next time once my business is off the ground. You can ask for a low bono rate. You can say, I really can't afford $500 an hour, but I could afford $150 an hour for 2 hours. What can you do for me for my budget? Always be willing to say that. You can negotiate, you can budget, you can barter. We're in Vermont. I know an attorney in Rutland County who accepted a year of 2 dozen eggs a week for her legal service that she provided. So bartering happens. Create an agreement. Make sure you've defined the scope. You don't want a lawyer who satisfies their research itch on your dollar, right? It's not a good relationship when that happens. And then when the billing comes to you, read the bill. Make sure you're getting what you're paying for. And if you have any questions, ask. Always ask. Responsibilities. What are your responsibilities to the attorney? Set expectations. Be very, very clear. Ask questions. If you're not sure about something, ask the attorney questions. Respond timely. Don't leave it sit. If you want the attorney to get back to you the next day, you should get back to them the next day. If you are comfortable with taking a week to respond to the attorney, then you should be comfortable that they take a week to respond to you, right? So manage those expectations by responding in a timely manner. And if you aren't a good fit, if the attorney doesn't connect with you, if you don't connect with the attorney, move on. Find somebody else. It's important that you fit with this person because they're going to be giving you advice that you're relying on for your business. All right. If you need legal services at the Small Business Law Center at Vermont Law and Graduate School, we're here to support you. You can submit an inquiry. The URL is here. We have a new website. It's no longer coming soon. I should get rid of the coming soon piece at sblc.vermontlaw.edu. You can email us and we will get back to you. The no-cost services include educational consult, which is mandatory before we refer you to an attorney. We offer helpful materials, legal resources to guide you. So after you've done the educational consult, we're going to send you those links. Things like the link to the Secretary of State's website where you can go to sign up for your LLC or to find your DBA or any of the other things. The Department of Labor, for example, for your employee workman's comp pieces, right? Workman's comp and unemployment insurance are two different things. You have to pay for the unemployment insurance and you have to pay for the workman's comp, and the unemployment insurance comes through the state of Vermont. And I think I fuddled that earlier. So hopefully that's a clarification. Just hit me. And then group educational presentations by request. So if you have a group, for example, we presented to a group of florists about particular issues for people who use florists for large events, for example. Particularly after COVID, there were a lot of cancellations and a lot of flowers that sat in shops and died. So interesting issues, and we're happy to do some general broad education for folks on that. All right, questions, follow up, anything else I can offer you here?
Thank you, Jeannie. Yeah, there are some questions that came up I'd like to get to, but before I do that, I just want to reiterate and put a plug in for your services. I mean, they're phenomenal services that the Vermont Law Center offers for business legal help for small businesses. So I encourage everybody that I work with to take advantage of them. So it's a no-brainer. So I want to encourage the group to do that too. So regarding the questions that came in, I am going to maybe ask Jan if she can unmute and ask her question. The one question relates to a part of your presentation that I'm not sure where you were at in your presentation, how the question relates. So maybe Jan, if you don't mind unmuting and asking to clarify that would help me.
Sure. I'm sorry, you're going to be hearing my guineas and my chickens in the background possibly.
It's
But
okay.
the DBA, I run a nonprofit, it's all volunteer, but it's technically an LLC as part of its name. So what my question was is, do you actually have to file for DBA to use that name without the LLC attached to it on your marketing materials?
You
and your-
should. I know of no one who has ever had an enforcement action over this, but technically you should.
Okay. And is that a separate form? Because I don't,
It is.
okay. And that's at the
Of
secretary.
course, it's always a separate form,
Separate
right?
form, right? Okay, so is that on the Secretary of State too?
It is. It
Okay.
is. You file the DBA through the Secretary of State's office.
Can you file that after the fact?
Yeah.
Okay. All right, thank you.
The place where you can get into problems is if you've been using a name that someone else was using, right?
Mhm.
But best you learn about that through the process of registering the DBA.
Well, the business
In your case, you shouldn't, because it's just the business name minus LLC. But sometimes, like Genie Zucchinis,
yeah.
it might be something someone else was using, and here I was using it too, and it causes confusion in the marketplace,
Gotcha.
and that's one of the reasons that you file the DBA.
Okay, thank you.
So Lynn has a question. Can an LLC member bring in an asset and set the operating agreement so that it returns to them when the LLC dissolves? And if that's not clear to you, Jeannie, what the question is, perhaps Lynn, you can unmute and clarify.
It is clear, I think. Can they bring it in? Yes. Can they say that at dissolution it returns to the person? Yes. It can fuddle with the basis for tax purposes, and how things align for tax purposes, but that's an accounting question, and that's all I know as far as that's concerned. Is it can mess a bit with the tax. There can be tax implications, is what I would say, and you have to talk to an accountant about that. But as far as bringing the asset in and taking it with you, should you leave? Sure. This is an operating agreement is frankly nothing more than a contract, and you can put whatever terms in there you want, as long as it doesn't run directly afoul of the statute governing limited liability companies. You're in good shape, and putting an asset in and taking it with a certain member on the way out is perfectly reasonable to put in there.
Thank you very much.
There will be tax ramifications. I want to underline that and talk to an accountant, please.
I was just in the process of clarifying my question with Stephen. He was wondering about the possibility of contacting you. Is it possible to contact you to work with through the Vermont Law Center, or how does
Sure.
how is that
I'd
possible?
like to clarify a little bit, Simeon.
Thank you.
I'm doing some academic research and not related directly to the subject of this workshop. I just would like to be able to talk to you about who I would want to talk to for my purposes.
Yeah, you can reach out to me.
So how?
Let me give you my email address in chat.
Okay, that sounds great. Thank you very much.
You're welcome. You're going to see that it is a different college than VLGS. I started the program at Vermont Law and Graduate School, the Small Business Law Center, years ago. And I have since moved on to become a dean at the Colleges of Law. So you're seeing two addresses there. So I'll just explain that going in so you understand.
Thank you, Jeannie. So I just want to put this general question out to the group. Are there any other questions or clarifications that people?
Oh yeah, I just had one. I was wondering, what was what'd you start, Jeannie? You said you started something at
The Small
when you-
Business Law. This program was my brainchild. I was the founder of the program
when you were
years
in,
ago.
when you were
When
in
I
law
was a
school.
professor at Vermont Law School.
Okay, but you went to
I did.
what law
I
school did you go
graduated
to?
from Vermont Law School.
Okay, and do you have a favorite area of law?
I came to Vermont Law School to become an environmental lawyer, and I left as a business owner. So it was a very and I then went into tech law,
Tech?
and
Tech
tech
law?
business law. Yeah.
That's amazing.
Yeah, it was it was a lot. Nobody looks at my path as normal. I became a computer science professor out of law school. It was weird.
Well, I saw that there's not very many. There's a room at the Costello Courthouse that is for environmental law or for the environmental courts, and it's but it's like for the, I guess it's for the people that work in that division. It's but it seems kind of vacant. That sounds like interesting.
Environmental law is a great area of law. And I still believe firmly and strongly. It's just my path went in a different direction.
Thank you,
Thank
Zach.
you. Yeah.
Ada has a question here.
Yep.
She asks, I have noticed that several of my clients have business base here, have headquarters and manufacture in Vermont. However, their companies are outside of Vermont. Can you touch on why someone will choose to register in a different state?
Grant benefits, tax benefits, cost of living. There's so many reasons. Pick one. I will say that incorporations are most frequently done as Delaware incorporations, and they're done that way because venture capitalists want to fund Delaware corporations. In large part because the law is so well known in Delaware. They got out ahead of that and they really made everyone want to be a Delaware corporation because all of the financial backers in the world understand what that means to be a Delaware corporation. And so businesses will often incorporate in Delaware, even if they do business in another state. So tax reasons, friendly to certain types of businesses, other things of that nature.
Jeannie, out of curiosity, if somebody wanted to register in another state, maybe that one, for example, is that work that Vermont Law Center could do? Or is it simply to register here in Vermont?
To be clear, we provide legal education services. Could we pass you to a Vermont attorney who can
Yeah,
do
I'm
that
sorry.
service?
That's what I meant.
Yes,
Yeah, sorry. Thank you.
absolutely.
Okay.
Absolutely. Particularly if you're registering as a foreign entity doing business in a state. That's a very different beast than reincorporating or recommitting to your entity formation. You're still an entity that is a Vermont entity. You just happen to be doing business in another state, and some other states make you register. Some don't, by the way. It just
Okay.
depends on where you're doing business.
I had one more question, Jeannie. If
Sure.
you could, do you know what antitrust, or could you help me define antitrust?
I could, but there's a full semester class at Vermont Law School on antitrust.
Okay.
And antitrust law, and it has to do with monopolies
Okay.
and that's what antitrust has to do with.
I see.
That's
Very
a
broad.
short form answer. It's very, very
Thank
short.
you.
Okay.
Thank you.
Could you, I'm sorry, this is Lynn again. Could you recommend a real estate investing courses, legal courses?
That's a great question. There are no real estate investing courses per se. Law professors are known for saying it depends. And I'm going to tell you it depends on what you're interested in investing in. Are you interested in investing in real estate so you can put up houses and sell the houses, rent the houses? Are you interested in investing in real estate for preservation purposes? All of those would be different courses and different things. So it depends.
I believe at this time it would be investing in real estate property as multifamily rentals,
Okay.
and structuring them appropriately tax-wise. So it's a cross between the real estate law and the tax laws.
It is. Well, real estate law, tax law, and probably land use in Vermont. So I would recommend taking some seminars and classes on that before you, and they would be around first real property and real property rights in the state of Vermont. You would take classes around leases and contracts. I know that doesn't seem like what you do, but you would. And land use,
Great, thank you very much.
zoning, local regulations.
Thank you.
Thank
Jeannie.
you.
All right.
Other questions for folks? We're coming up to the end, but maybe there's time to squeeze in one more question if anybody has one before we begin to wrap up. Before you sign off though, let me just take a minute to let you know about our upcoming class that I think you'll want to know about. But before that, any other questions? Going once, going twice. Okay, sold. I just want to ask the folks who participated with us on an iPhone, if you could